having investments in a startup series would really be worthwhile. Potential is higher, thus being able to have at least the 23% minimum ROI for that. Infusion of funds coming from the support of foreign investors and local investors as well are all in place.
So your investment is I think there are several stages for investment from the private equity.
Yes.
So and your investment is basically the early stage, middle stage, late stage, or depends on the deal. What is your staging strategy for your investment?
Okay, so maybe to answer the question, allow me to just share with you some insights that I've gathered from the certain people we work with. So that's why before we were termed as an angel investor, because sometimes we also participate in investment rounds or through our own private equity funding, we participate in early startups, but there's a caveat. As long as that startup is within our, organically grown ecosystem, it means one, we know the founders really well. We've worked with them before. We were able to witness their success from the other businesses that we were able to start. So this may be the serial entrepreneurs that we support. So having them as part of the startup investment is a risk we're taking because the startup scene is quite, I'd say, too adventurous.
Sure.
There may be a sector who would support it highly, and the big hedge funds, the big VCs sometimes would really support it well, and that's really needed in the industry. However, for us, we want to make sure that conservatively, but in a very intelligent way, these startups are someone that I know has already performed well with the past entrepreneurship. And of course, that we know there's a certain principle or discipline that we can interject in between. So if those certain controllable factors are in hand, then having investments in a startup series would really be worthwhile. Most of our participation actually coming in at a mature stage, where of course the potential has been identified, but we see a lot more space to grow. There's still space for scalability, and that itself as a mature market is indeed, for me, the most ideal to invest in, and that is irregardless of sector.
Okay.
And however, I'm still not saying no to certain acquisitions as part of their exit. So let's say certain mergers and acquisitions or certain leverage buyouts have always been appetizing. It's just a matter of making sure that there would be a good bounce back after it. Because distressed investing are some of the types of investments that other more risk-taking investment companies would like to participate. However, for me, again, because I'd like to make sure that risks are mitigated well, then I would like to have our space within those that I've mentioned. The startups, but organically grown, and the mature sector, or at the mature stage of the business.
Oh, I see. So in that case, what is your criteria until the exit? I mean that how long term do you try to exit?
Okay. Let me identify the exit word in two terms here. Exit as in exit for the PE funding. Normally it's between 5 to 7 years.
5 to 7. Okay.
So let's say we have 5 million worth of PE funds. So we have that tenure of 5 to 7 years, depending on the project, depending on the ROI that we are hitting, that we are targeting. So the 5 to 7 years, and then we either exit through IP or we exit through further acquisition.
IP means IPO, you mean?
Yes.
Okay.
Or the exit through further acquisition.
Okay. Buyout.
And then a buyout. And then from there, we expand and we broaden the whole value chain altogether. Forgive me for being redundant on the word value chain, but that has always been a key term for me to make sure that whenever we operate the business, either through the finance seat or through the operations seat, that value chain is really observed well. And then, of course, the second term for the exit would be having it for, let's say, as long as the innovator or the founder wants to be supported. That's usually my first question for the founders that we're supporting. What's your direction? How do you see the business 7 years from now? How do you see yourself 10 years from now? Are you still micromanaging? Have you given an exit, a graceful exit to your generation 2, to your second generation? All these things, because again, the main objective of us investing into a company is not just for monetary of acquiring shares. Anyone can do that. It's easy. But because we're seizing on that relationship that we have with each of these founders, because in private equity, allocation of equity shares by a founder is a very good opportunity. It's only by invitation. It's not publicly announced. It's not publicized. Unlike those who are very used to investing, through publicly listed companies, where you get to invest by buying certain stocks, stocks through exchange. For us, through private equity, we seize that relationship that we have with them, which is to support them. So we'd always ask them, what is your vision? If your vision is really to have the business, because we believe that out of 100%, 95% would want to exit through sale, buyout, or public listing. However, there's this interesting 5% who still wants to retain the business, grow with it, and create a legendary business with them on it. For me, the 95 or the 5% are always equally still worth supporting. So for me, those are the certain exits that we would want to achieve and to support as we grow their business to scale.
Okay, thank you. So, and also maybe audience wants to know the numbers. So do you have any target IRR or ROI? Your PE fund, what kind of ROI, IRR criteria?
So as I mentioned earlier, at an average, our investment allocations would be at $5 million a year, but we're increasing it over time, and hopefully by next year we would be having $10 million for that, through the help, of course, of limited partners. And as Johnson Global enjoys to maximize the private equity opportunities for them to make sure that it's allotted to this diversified portfolio, then the takeaways would be through the ROI that we are always targeting, which is not less than 23%. This well-educated, or shall I say, this 23% ROI at the minimum is, of course, shall I say, an educated, well-assessed risk already in place. So thus, again, the participation in such a value chain, the participation in such a diversified market, because we know that one can generate more than the average ROI. One can be conservative. The other one can be low because it's quite tricky. It belongs in a volatile area of the economy. But one is fearful enough that it can take more risk and potential is higher, thus being able to have at least the 23% minimum ROI for that.
Okay, I see, thank you. So your fund, $5 million, starting from $5 million and add $5 million year by year.
Yes.
Okay. So who is your investors to put the money into your private equity fund?
So When it comes to the private equity funding, it's being supported by different sets of investors. And we know that appetite of investors to be involved in such would really vary as well. And profile would vary. So this would involve certain private and high net worth individuals, accredited investors, and investor or institutional investors.
Institutional investor also?
Institutional investors as well. Yes.
Filipino or offshore?
Offshore.
Offshore.
Would always, yes. They'd always be more interested actually in the Philippine space of economy. Yes. So those three would be the profiles of our limited partners. Most of our offshore investors are coming from the Middle East.
Oh, Middle East. I
Middle
see,
East and some parts of Europe as well. But that's a good thing about investment portfolio because you can attract more investors coming in as you share and give them a look of the present landscape, how the dynamics are, because they do hear a lot about the Philippines. Sometimes good, sometimes bad, I have to admit, but always is interesting. So they do know about the Philippines, but their knowledge of it is not as deep as looking at it, on a micro perspective. And that's our job. Our job is to make sure that they look at the business environment of the Philippines with the right lens on it, unbiased, to give them that fair decision, and making sure that we handhold each other as we go through the exit.
Okay, that's good. So you were pretty open to invite the investment from anywhere in the world?
Very much, yes.
Do you have any criteria to select the founder?
Yes. Normal for private equity funds to set a minimum of between $200,000 to $300,000 for investments coming in, and we do the same. However, when it comes to geographic locations, again, it's limitless, it's borderless. We welcome offshore investors as long as, of course, we have a certain process to go with it, and I believe due diligence is being done, vice versa, for both parties. And we're both open to that. And of course, making sure that at the end of the day, we are of the same value. We're not sharks. This is not Shark Tank. I would never want to participate in such a Shark Tank program because I feel like we're killing the creativity of the founder. We're killing the vision of the founder. Again, our job is to support, not to dominate. And if the founders or if the investors are aligned with my values or with our values, which is making sure we are here to support, we're not the lead actors and lead actresses here, then I feel like there's an alignment. So again, it's not just on the financials, it's really having a certain alignment that our vision is to support the thriving business to scale and making sure that, of course, at the end of the day, since it's business, it's not charity, that we really get the right profits that we are aiming for and that we are able to answer the next question after we exit, which is, what do we do now? Do we expand further? Do we participate to the next investment round? Do we want to diversify further? Because I believe these investments are not just here as fuel or arm and muscle. These are partnerships and long-term partnerships for everyone, not just on our side, but on the side of the business founders that we are supporting.
I see.
And if investors are aligned with this, I'd see a very happy long-term relationship.
Okay, thank you. Okay, another question. I think you are the your fund is HandsOn Investor, not silent. HandsOn Investor, meaning that you support the business. So could you tell me how do you involve the business? How do you support the business? Maybe I think and also, for example, how many percentage of stake your fund take, and you take a board seat. How do you hands-on support to each portfolio company?
All right, okay. So since portfolio companies offer certain shares for subscription as we invest, others would offer 10%, 15%, or as high as 35% for certain investments.
Okay.
Then with that, we share 60% of it to our limited partner or to our capital partner. And then the rest would, of course, the 40% would remain to us. I know that itself is a disruption of a PE structure because most would do it either the other way around, 40-60 or 50-50.
Okay.
But for us, we understand that the risk is given, thus the risk is shared. So with that, that is our way of sharing that risk by having the 60% of returns to the limited partner and we retain the 40. And then management fees are the normal for a 20% management fees for the company, for the firm. How are we participating in the operations of these investment portfolio companies, if that is the question? We make sure that we are part of the firm, either part of their strategy board, finance board, or the operations board, which I know is quite tasky, but it depends again on it depends on the preparedness of the company. Because that's, I think, what we are good at. More than just infusing funds, we're good at identifying the potential, reassessing the structure, realigning with the right management approach before anything else. So then we can objectively say that given this certain situation, we can grow to scale through a certain product development, to a certain downsizing, but infusion of an alternate approach. So similar to this, we make sure that more than just being a silent partner for others as they are happy with it, maybe that works for most, but for us, we want to make sure, because as we are responsible for the investments of our limited partners, we want to make sure that we are not on the blind side. We want to make sure that we have a say. That's why we don't go anything lower than 10% for the shares that we acquire for. And thus, having a seat in the board would be a good start. Making sure that we are heard of. Making sure that if there are certain concerns that would need our advice, we are there to advise them. And I'm never micromanaging, but I'm always a fan of making sure that, redundant as it is, we just support the founder to scale. Yeah, so there.
I see. That's interesting. Okay. So I think you are always looking for the good investment opportunity. How do you find the company to invest, or how do you evaluate or do due diligence of the companies before making decision to put the money into?
Well, let me just share with you as well. It's actually quite tricky to identify that right company. However, I take that challenge and make sure we get to identify it in the most proper and diligent way. Because for someone who has been into the sector, you get across different profiles, interesting characters, different profiles. Some would come in, flashy. Some would come in as humble as they are, but they have the potential. They know what they're talking about. That they carry is something that has the future with them. But that's that's something that the numbers won't really won't show you. So it would be an injustice to just evaluate them based on the financial statements, which most of the private equity firms and investment capital firms would do.
Sure.
There's always a certain space to ask more about it. Let's say for some, their FS financial statements for the past 2 years were not as beautiful as how one should be, but we have to understand what happened in between, because that's where then you get to identify the potential. So again, for us, investments is not just about making sure that it generates the right money. If our objective is really into that, I'd suggest go into the publicly listed trade. But because our objective again is to support and identify the potential, because most private equity firms, and I think I'm one of them, or we are one of them, is to make sure that we acquire shares of certain companies, not yet at scale, but these are undervalued businesses. Undervalued businesses would not really give you a very exciting FS.
Okay.
That's why they're undervalued.
Yeah. That's
If
good.
they're not undervalued, why do they need our help for? So that's why for me, it always asks the question, what's the story behind the FS?
Okay.
Everyone needs to hear the story of the entrepreneur first. What's the story behind this FS? Good or not?
Story behind the FS.
Understand the story behind the FS. Let the person justify and share that interesting entrepreneurial story of his or of hers. And I'd always be keen on that. Because I'd say we are very fortunate to have that certain keen eye, keen ears, and keen heart as well.
Keen heart.
To not just listen to what is out there, but really to understand what we have in front of us. For all you know, you're talking to the future unicorn. It just doesn't have the right gas and fuel now.
I see,
Crumbling by numbers.
I see.
But you know that if you infuse support, give this guy $500,000. How far can he go? That's the power of investment. Now that's the power of private equity, which is not publicly announced. His need is not publicly announced. The opportunity for him to share the shares for our subscription is not publicly announced or is not advertised. These are basically private opportunities shared by instances, by invitation as well. And again, because we operate into a certain organic ecosystem where the certain business trust is there, and that is our asset. Because venture funds, the funds are there, but finding the right company to invest it on, or to invest it in rather, is I think what we bring to the table, to the private equity structure. So I hope that answers the question.
Yeah, I understand. Actually, I don't know much about private equity fund in Philippines. What is the industry of Philippine private equity industry? Are there many private equity, or your private equity is definitely different from the venture capital? I know that many venture capital company under the major banks or major financial institutions, but I don't know much about the private equity industry here in Philippines.
Well, venture capital is a subset of private equities. However, here in the Philippines, it's a matter of categorizing it well. Well, I hope soon, or maybe in the near future, we would be able to categorize it properly. Maybe because years ago, the Philippines itself, it was not ready to acknowledge that there's the private equity sector. So thus, companies would then declassify themselves, reclassify as well. And but the space is really as creative and as exciting as it is. You have this certain company as well who's into crowdfunding. Crowdfunding is, if you were to assess it fairly, is actually a form of private equity. Because same structure, you have subsets or a pool of investors as entering a consortium together, acquiring shares. There are certain fund of funds here in the Philippines as well, which is following the private equity structure, but they have publicized themselves as a venture capital firm. But by structure, it's the same with a PE. Because the startup ecosystem, I feel, has embraced the word venture capital more than understanding the private equity. But then again, it depends on a certain stage. So that's why I feel like most of the companies or founders of private equity firms have branded themselves according to the market that they are serving. But yes, there are not really a lot, but there's a huge space still to consume, but there's already interesting space consumed. And this would be growing further and further as the Philippines has been opening its doors more to investors, not just on the institutional perspective, but for the private sectors as well. And we actually are looking forward to more fruitful years for investments coming in for the different private companies, not just on our portfolio, but with the others as well, because Philippines has been marked as the next unicorn country, not just because we are the backstage of Silicon Valley, but because potential is there. The right brains, the right arms to work on it has always been there. Infusion of funds coming from the support of foreign investors and local investors as well are all in place.
I see.
So it's just a matter of time that we get to hear another unicorn coming from Southeast Asia and maybe from the Philippines. And it would be good to know that you are one of those who supported that unicorn.
That's a fantastic story. Oh, finally, you are looking at several companies and sectors. Could you tell me what is your next interesting area or sector, company?
It was actually, it's really a good question, not because it's planning season,
Right.
but because we were able to stumble upon a very interesting sector. It's the woven and the non-woven textiles of the Philippines.
What?
Woven and non-woven, like the weaving textile, weaving of garments.
Garment. I see.
So you'd see them mostly worn during cultural shows, cultural events, when we talk about Filipiniana. And you'd be surprised, this has always been supported by the DOST of the Philippines, which is the Department of Science and Technology. Thus, it also launched a sub-organization for it, which is the Philippine Textile Research Institute, long ago.
Oh, really?
And the woven and the non-woven garments has always been part of the main core of the PTRI, the Philippine Textile Research. Because Philippines is very well known for its natural resources. Earlier, I talked about commercializations or commercialized industries, agro, agua. Then now we have this, the garments or the textiles, which is the woven, non-woven. And this one talks about heritage. So you may not be talking to the usual PE structure, but this I think are the pillars that we are proud of, that we are supporting. We support commercialization, industrial growth has always been there. Agriculture, agua, and culture heritage. Because without this, I believe the personalities, the profile of the country by economy will not be complete. And we want to make sure that it is completed by having these pillars in place. So my vision that I share with my partners is really supporting the different pillars. Again, commercialization, industrialization, agriculture, fishing, as we are an archipelagic region, and of course, anything that speaks and boasts or promotes culture, heritage, that would always be key. And it's not a cheesy topic. We've made a very good study on it, and we're surprised, really surprised to understand that by statistics, these projects, given the right fuel, can generate as low as 15% ROI and as high as 31% ROI, given the right fuel. So,
I see.
because the market itself is huge, and export is one of the best channels for it to progress. So these are the pillars that we want to stay strong, and hopefully with the support of our own investors as well, we really get to be firm on these pillars, make sure that it is in place and executed well.
Thank you very much.
Thank you.
Thank you very much. We know much about your business and also the private equity industry.
Thank you, thank you.
ということでね、今日はジョアナさんのファンドについてね、いろいろすごく深くね、いろんなお話伺いましたけども、こういったね、ファンドにね、興味がある方はね、またこの YouTube を通してでも結構なので、またお問い合わせとかね、いただければなと思います。ということで、皆さん最後までご視聴いただきましてどうもありがとうございました。Thank you very much. Thank you very much.
Thank you so
Thank you.
much.
Thank you. Bye bye.